Guys, we have another interesting on-chain data regarding the Bitcoin accumulation, and of course Timo is also looking at the volatility of Bitcoin at the weekend. And in the chart analysis, Finn goes on the weekly chart and looks at the weekly candle which closes today at the evening. And of course we also have another interesting and very important pattern for the Bitcoin price development in the next few days, so watch until the end, and if you like our content, please leave a like and a subscription and have fun with the video.
Whales started again to buy bitcoins. This caused our latest pump in the last 2 days and also gave the market a very strong stability, but retail investors, smaller entities, are still selling their coins. What is this and what are the reasons for it? What we can see here is the specific entities by their Bitcoin balance on their wallets. We have smaller entities with less than 1 Bitcoin, and we have the big whales with over up to 10k Bitcoins on their wallets. And what we can see here is perfectly that all those small entities up to 100 Bitcoins on their wallets are still selling Bitcoin, while the bigger wallets, the whales, are buying all those Bitcoins we see on the open market. This is also a really strong sign for the Bitcoin price, because we can assume that maybe the whales know something we don't know, or maybe they predict the market won't go to a new low. We won't see a bigger dump before the halving, and that's why those entities are buying Bitcoin. Very important to say in the Glassnode on-chain data, normally exchanges or exchange wallets are excluded, which means we can say that also the wallets from the big finance services, for example BlackRock or Fidelity, are not included in those statistics, which means we have for real bigger entities, real rails who are buying all those bitcoins and give a really strong stability to the market. Also another very interesting topic, the volatility we have seen on the weekends. Here perfectly we have the CME close of the traditional finance markets on Friday. On the other side we see the opening, and Bitcoin is still moving between those lines with a really small range. This is something we have seen over the last few weeks since the ETF approval more often, because I'm really sure this is a trend we will see more often in the future. Back in the days when we have seen extremely volatility on the weekends, like plus 50% or something like this, I don't think right now with the entry of the big players from the traditional finance sector, Bitcoin will be more like stocks or other finance products who won't move over the weekend. It's something we can talk about. Maybe it's not that good because it's more against the basic idea of crypto, but it's also good because normal investors, like retail investors who are not currently invested into Bitcoin, will not be that deterred by really strong price movements over the weekend, and so Bitcoin is more attractive also to the mainstream. So I would say that's all for now, and let's jump into the charts.
Today I don't got my normal microphone here, so I have to use this headset. I hope the sound quality is still acceptable, and we need today to have a look at the weekly chart, because in 13 hours we'll see the weekly close, which is, in my opinion, more or less the most important chart for Bitcoin. So as we predicted on Friday already, that we won't probably see any bigger moves, which was indeed the case. So we still have more or less the same situation on the weekly chart. We have our double top right here, which we formed over the last 2 months, and now we are consolidating below important resistance. For sure, we are seeing a green weekly candle, which is normally a good sign, but we are seeing a large wick to the upside, and we are consolidating below crucial horizontal support, as we already talked about in previous videos. So in my opinion, this is not a bullish sign at the moment. For sure, also we need to talk about the large time frames. So on the monthly chart, as we already talked about while the monthly candle was closing, we got a doji candle here. So this is a candlestick reversal pattern, which could also mean that we'll see a reversal. So the monthly time frame is, in my opinion, not that bullish. The weekly time frame is, in my opinion, not that bullish if we see this weekly close like it is at the moment. But for now, I would say we'll have a look at the smaller time frames. At the daily chart, we can also see pretty interesting stuff, because if we have a look at this uptrend, for sure, we can clearly see that we at the moment are consolidating below it, and we just tested it on. For sure, we maybe should jump on the 4-hourly time frame, because you guys probably want to see if this uptrend is valid. And yes, we got multiple touch points of this uptrend. For sure, we already broke out of this uptrend and tested it from the upside, but this was all, in my opinion, so euphoria while we saw the improvement of the spot ETFs, or the weeks leading to that event. And then after that, we corrected inside it, consolidated a little bit and broke to the downside. Now we saw a retest from the downside, got rejected again, and we are forming this symmetrical triangle we already talked about in the last videos. So in my opinion, at the moment, this is the most important chart pattern we have to look at. The monthly time frame is not looking good, the weekly chart is not looking that good, and also the smaller time frames are, in my opinion, not that good. For sure, we could see a bullish breakout out of that symmetrical triangle, and that could be our second chance to maybe get a weekly close then with the next weekly candle above the 45,000. And if the bulls will get that chance to get another try on to closing a weekly chart above the 44,500, something like this, this could for sure be very bullish if we get a weekly close above here. If not, that would be a second wick to the upside, as we already talked about, I think on Monday last week, that there could be a chance that we see another wick to the upside get rejected before the weekly close again, and then more or less that we will have the same scenario as we saw last bull run or mid-cycle bull run, where we also saw three moves to the upside, and then we saw two large weekly wicks to the upside. After that, we saw a bigger correction over a few weeks. In my opinion, this could be the case, and as I already told you, the monthly chart's not looking that good, the weekly chart's not looking that good. It could be, in my opinion, that we see this another wick to the upside if we break the symmetrical triangle out to the upside. If not, I'm really sure that we'll see a further correction coming. So if we want to have a look at the really small time frames, or more or less the smallest time frame I'm looking at, this would be the 1 hourly time frame, and also here it's not looking that great. So as you guys know, we are coming from a correction, saw a little counter movement to that, and for now we broke out to the downside from this uptrend channel, formed our symmetrical triangle we already talked about. So it's again, in my opinion, the most important chart pattern we need to look at the moment. And for sure, if we see a breakout above that symmetrical triangle, that would be a bullish sign. When we get the ETF liquidity from the normal financial market again, it could be that we see a bullish breakout out of here, but in my opinion, it's more likely that we maybe see a correction down below. But as always, time will tell. We are traders, so we are waiting for a breakout out of our chart patterns, which we can use to both sides. So I think that's all you need to know about the charts at the moment. I hope you enjoyed this video. If so, please make sure to leave a like and comment for the algorithm, and I would say we'll see us tomorrow.